If we know that this level down here is the old daily low, and again, I'm going to take it back up to the chart on the daily chart. That's this low right here, okay? By dropping down into the hourly chart, that level is here. All I'm doing is transposing those daily levels right to this hourly chart. The entire week has been bearish. Okay, it's been going lower since the beginning. Then we had consolidation in here. The market creates this short-term high and this short-term low. What rests above that short-term high? If you've taken notes and been paying attention, it's buy stops. What's resting below this low here? Sell stops. Watch closely. The market trades down initially and takes out the sell stops. Why would it do that first? This is inducing shorts. Okay, so it engineers liquidity. Even if the idea is that they want to take the market down to this level, if it's been consolidating, I like to see them do this type of move here, where it drops down first. It's kind of like a sucker play. Anybody that has a sell stop below here, they want to sell on weakness, they're going to get tripped into the marketplace. So now they're triggered in short. And then they start doing a run against those traders and against those that were already short from this high. So what are they doing? The market's being driven higher, and the algorithm's going to attack that buy stop liquidity pool. Why would they want to do that? Number one, it's going to punish those individuals here that went short. When it drives above this high here, it sends all those buy stops into market orders, flooding the marketplace. That gives a huge influx of willing buyers at a high price, which is the perfect counterparty to smart money that wants to sell at a high price. Remember, the market wants to go down here. So when it drives up to here, those buy stops are the counterparty or the other side of a smart money trader that's wanting to go short, because they're going to sell short. They got to sell it to somebody who wants to buy it at a high price. That's why the market does this. Okay. In your notes, you want to record anytime a significant price move lower is expected, always anticipate some measure of a stop hunt on buy stops or a short-term high being taken out. Obviously, it's reversed when you're looking for higher prices. Generally, you'll see a short-term low taken out and sell stops taken before you see a very pronounced rally higher. Don't take my word for it. Go through to your charts and you'll see it's actually occurring almost on a daily basis. So we're going to drop down